Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Thursday, May 3rd, 2018. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. In the previous session, we had the FOMC statement and the Fed interest rate decision come and go, and we were left with some very important key levels. The FOMC May 2nd key level is now here. 2650 quarter is the ES key level, and what we saw here initially when the statement came out, price rallied off that level and then dropped away from it, closing below. Here you can see already in pre-market trading, price is pushed into the monthly pivot range, testing it from below. That's usually quite bearish. One thing I mentioned here yesterday in a tweet, and I've also mentioned in our trading room, is that every FOMC statement this year, 3 so far, have been offered hard. 1, 2, and now the third one is already seeing selling pressure. And so what I mentioned before is that we have not even come back to test the origination point of those prior two after taking them offered, and that's quite bearish. Are we also going to see a slide here after this recent FOMC statement? And right now it appears we are preparing for a push lower to at least test this low here and perhaps as low as this low. And again, that could provide a great opportunity to watch for rejection and then perhaps return it back to 2703.75. That could be quite a move very, very quickly. So again, at the moment, looking for signs that we might see some weakness. We are still chopping around this middle section here, so there is still the potential to see some chop back and forth before we see expansion in one way or another. But right now things are leaning short term to the downside, especially after price pushed through the previous session's midpoint in that rejection tail. Again, that usually leads to additional weakness, so we'll continue to watch this here in the ES. Now if we take a look here at the NQ, very similar price action here. You can see in the previous session here we had the FOMC key level come in at 66.86 half. Price took it offered this morning, a little pullback, and then back down. So again, this is looking quite bearish. The last couple of times here, this is the FOMC key level offered. On that rejection, we came back to it. Remember, that was our call right there. We got it. Price tried to hold above it here and failed, and then the next one came out and offered. We never got back to that one. We did call for that to happen, got very close, and now we're taking it offered again. So again, another scenario here where, generally speaking this year, that FOMC key level has been offered on most cases. So are we about to see another drop? That could be the case. We are clearly coiling up. Compression is clearly being seen. You can see down here on a 5-day range, we are below 65% of ADR, which is a compression state. Obviously today's not done, so we could clearly push out of that, especially if we start to break down through 6600, which could open up a move back into 6400 very quickly, and perhaps even down into the 6150 LVN. Remember that 6150 CLVN right there. It's going to be very important because any rejection in that zone could lead to a great bounce right back to 6653. So those are a couple of moves that we'll be looking for here as the month progresses. Now taking a look at crude oil, you'll notice in crude we got the FOMC key level, but price is holding above it right now. So you can see right here, this has been a very bullish market. 67s have been tested each of the last 2 days. You can see a clear box that has formed above the 67s. As I've mentioned before, any failure to hold 67 could open up quite a move into 62 to 62.18, and then down here towards 60 as well. So it could be a major move. Now one thing to keep in mind is the general trend has been very bullish. So if we do see a breakdown and a rejection of those lows, that could signal a major upside break and continuation. So right now, keeping an eye on 67 to see how the market operates off that level. A little bit of rounded behavior so far, taking the previous month's close offered. It suggests that we want to continue to test that 67 to see what it's made of. So again, very important level here to watch as we move forward. The FOMC key level for May 2nd is 67.47. Taking a look now at gold. Now gold, this one right here is seeing quite the move off of the 1300 to the 1306.60 key zone. Remember back here we were near the upper end of the range after rejection. Price takes the FOMC key level offered on this day, and then we point to this zone right here being the target. Great precision in identifying that target zone. Not only did we identify that as a target zone, but then we watched and looked for signs of rejection. You've got to look for signs of rejection because primarily speaking, you see fades off the lower edge. That's what happens. Fades off the higher edge. Only once will you see expansion and a continuation. And so it makes much more sense to look for fades each and every time and look for signs of fades. And here we got a major push down. The next day it looked like it was building out for potential expansion. But again, anytime you form a rejection day or rejection range like we had yesterday, the midpoint becomes very important, and breaking back above that mid suggests a bullish squeeze here. So that could lead to a move right back to 1338 very quickly, followed by a grind into 1360 to 1365. So again, in that scenario, you would want price to close above the previous session's high today. So there's still a chance to fail and reject at that level, but again, as long as price is holding 1300, the flow could be seen to the upside. Lastly, let's take a look here at Bitcoin. You can see Bitcoin, we have 91.40 as the FOMC key level for May 2nd. Price continues to trend higher. You recall the 5-day tight range that we had over here that led to the expansion. Then we got another 5-day narrow range, another round of expansion, and now we're seeing another narrow 5-day range developing, which could lead to another round of upside break and continuation. So again, as long as 8,500 continues to hold, we could see further strength. We talked about the next level up being 11.3 to 12K. So again, we could see much more upside here as long as market structure remains intact. All right, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well. Take care.